कौन सा सेशन है कितना Hello everyone, welcome all of you to this Sustainability Reporting Standard Board's initiative to have webinars every weekly webinars Spark. So these are the initiate. This is the initiative which we have started, and today is the 13th webinar series. And I welcome all of you to this 13th webinar series of the Spark. What is been Spark? What is the Spark? All of you must be aware who are regularly seeing and visiting our webinars. They all are must be aware about our Spark initiatives, friends. What is the Spark? Yes, anyone can say. So this is bridging, this is a demystifying, let us understand the sustainability, demystifying the sustainability, catalyzing growth. And webinar series 13th is a bridging the gap, aligning ESG strategy with net zero commitments with the Spark initiative, that is sustainable practices, progressive action, aligned resources and resilient growth with the knowledge expansion. It is our endeavor to serve the best to the members and students of our institute, and being the national agenda of our Honorable Prime Minister to have India, our nation, as a carbon neutral by 2070, and by which he has also given us the Panchamrit to be followed by 2030. We have reached out to entire nation across 177 branches and 5 regions to have our 5 P's initiatives, and that is we are celebrating the Sustainability Month with our 5 P's initiatives, that is tree plantation, the peace, prosperity. These 5 P's includes planet, prosperity, partnerships, people, and peace. And this we are celebrating through the tree plantation. Every branch and the region is doing tree plantation, walkathon for sustainability, sustainability real competition, motivational session for the peace, and partnerships and sustainability awareness surveys. Friends, you all must have received through your email our survey points. It's a very simple survey about the sustainability awareness. Friends, we are also planning to come out with a carbon emission calculator, so you can actually calculate how much carbon footprint at your office, at your home, and you can calculate for your clients also, and then you can also suggest what will be the best how to neutralize this carbon emission. So we will be giving this carbon footprint calculator free of cost to all our members and their C offices. Scope 1 and Scope 2 carbon emission calculator will be there for everyone, for our members, and we are trying to inaugurate and release this calculator in the month of on the 1st July itself, most probably. We are also coming out with ISA, this Sustainability Assurance Standard 5000 and ethical standards. We already formed the group and started the meeting for the same. Today's session being SAB's framework for ESG securities, very, very important topic. SAB day in and day out is coming out with some of the other frameworks or some of the other circulars, either on the reporting standard, on the reporting requirements, or some of the other frameworks. Friends, and all these initiatives of SEBI, we are regularly interacting with the SEBI, supporting them for the corporates requirements, reporting requirements, assurance requirements, all those initiatives. Along with that, we are also having this kind of webinars. 2 certificate course during this year. In 4 months we have already completed the third certificate course. Also we are coming out in the within short period. Which date? 12th of July, we are coming out with next batch of certificate course on BRSR. So friends, you can take benefit of this, and this is a capacity building measures for our members. And along with that webinar, today's 13th webinar since last 4 months, every Thursday, 4 to 6 or 3 to 5, we are having these webinars. And today's topic, I am welcoming Sushil Sharma ji for taking up this webinar. Welcome, sir, and really grateful to have you in this webinar. And I also welcome CA Pritin Shah and Neha Shah, CA Neha Shah, for taking out time and coordinating, moderating this session so that your knowledge is also upgraded along with all entire fraternities benefited. So thank you and welcome all my dear participants. Welcome all of you with these words. We let us initiate this webinar, today's 13th webinar on SEBI's framework for ESG securities, and over to moderator.
Thank you, Preeti ma'am. So today we have Mr. Sushil Sharma as our speaker for the topic SEBI's framework for ESG securities. He is a founder, managing director, and the head of research and design of Stratadime. He is a chartered accountant with an MBA from IIM Bangalore. He is also an associate of the Chartered Insurance Institute, UK. He has 22 years of experience in banking, insurance, and financial services. Given his significant experience in the insurance sector, Sushil Sir is one of the world's leading experts on sustainability with in depth knowledge and awareness of multiple industries, their value chains, and how sustainability related frameworks apply to each of those industries. As a result of these capabilities, two of the four largest rating companies of the world work with him. He's also one of the most conversant professionals on the IFRS sustainability, and that includes SASB, TCFB, and CDSB. His ability to convey all these concepts in easily relatable ways comes from his decades of teaching and consulting experience. So, over to you, Sushil sir.
Thank you very much. Thank you for that very kind introduction. And thank you, Madam Chairperson, for giving us this, giving me this opportunity. It's always my honor, privilege, and pride to be at the service of my institute, of which I am immensely proud. So thank you for the opportunity. And I'm going to just share my screen so that all of you can follow my presentation. And I will be very happy to take questions as we go. So I hope you're able to see the screen which says, I have put green within brackets, social, sustainable, and sustainability linked bonds. This is SEBI's circular of June 2025. The green is in brackets because very specifically the SEBI circular does not cover green bonds, which is covered previously. But from a learning point of view, I'm going to cover this in three parts. First part is what is the essence of SEBI circular. The second part is what is the structure and the underlying regulation that SEBI wants us to follow. And when I cover that, I want member chartered accountants to take very particular note of very, very specific opportunities that chartered accountants can leverage. It is not like sustainability reporting. It is not like any of the usual stuff. There is a verification, use of proceeds, certification of financial application of funds, which is very much a chartered accountant's turf. Today, all these tasks are being done by one or the other agency, and we should step forward and take our, as I always tell in all the engagements involving our sustainability standards board, those all opportunities belong to chartered accountants. Independent review, verification, authentication of use of proceeds are very core elements of this SEBI circular. Okay. So, and then the last part, which is a little open-ended, a few examples, a few real examples and case studies of green, social, sustainable bonds. How does it look and what we can learn from that? So let me go forward. So this is the first few slides are about just what essence of what the SEBI circular says. To all issuers who have listed or proposed to list ESG debt securities other than green debt, subject framework for ESG debt securities. That's the opening part. And I'm just going to stay with what are the main and important things. So while this circular says not including green, but very much there in the definition, it says environment, social, and governance debt securities means green securities, social bonds, sustainability bonds, sustainability linked bonds. Now, for social, sustainability, and sustainability linked bonds, the specifics are in this circular. For green debt, the specifics are in the prior circular. But just to reassure you, there are so many commonalities between these four types of bonds. So in this session, we are going to look at what is SEBI's requirement, what are the commonalities, what are the differences, what is industry doing, what we can do as chartered accountants. So then after saying that, it also says, or any other type of bonds by whatever name called that are issued in accordance with such international frameworks as adapted or adjusted to suit Indian requirements that are specified by the board from time to time and any other security specified by the board. So that gives SEBI the open-ended opportunity to include various other things. And there is a reference here to international frameworks. I'm going to show you, which is in the SEBI circular, what are those international frameworks. More importantly, I'm going to go through the essentials of the main of those international frameworks. And as I also repeatedly say to all CAs in any forum, all these documents are much smaller than anything that we would have studied during the course of our qualifying exams and our professional practice. So it is very easy for you to go through this and visualize how you would like to do the authentication and become present in this market space. The debt securities shall be labeled as social or sustainability linked bonds only if the funds raised through the issuance are falling within the following standards, in which serial number A, International Capital Market Association, ICMA, is the most thorough and well articulated to follow. Of course, climate bonds, ASEAN standards, EU standards, all of those are also have valuable additions. Multiplicity of standards in ESG. So ESG, sustainability has one complexity. The subject itself has got many, many different areas such as emissions, energy, water, waste, social factors, governance factors, and so on and so forth. Some of these require technical experts who should work along with chartered accountants, work under the guidance of chartered accountants in most of the scenarios that we see. In addition to that, there are so many reporting standards. In addition to that, when we go into something like specialized area like ESG bonds, you see another set of standards. So let's pick one, the most clear, clean, and what is ICMA is followed by most of the bond issuance market participants. It is the industry body for bond issuers. So it makes sense to look at that. But I will look at that later. First, I'll just cover what the SEBI circular says. It says social bonds mean a debt security issued for raising funds subject to conditions that board has specified that are aimed at positive social outcomes, especially the following, but not exclusively: affordable basic infrastructure, clean drinking water, sewers, sanitation, transport, energy, access to essential services, affordable housing, employment generation, food security, social economic advancement, and empowerment. So in our articulation, that is my firm's articulation, these are all actually hierarchy. You start from basics, provide essential services, provide house, ideally then provide food security and or employment. It is interchangeable. And then only this question of socio-economic advancement and empowerment comes. So, but a given project does not have to address all of these or these in a particular sequence. It can be any one of these. Okay. So let me here itself give you some examples, while I will later on give you true life examples. For example, a housing company is building economic weaker section housing. It can raise the funding for the project using a social bond and then fulfill under Pradhan Mantri Awas Yojana or any other such project, can create affordable housing. So the important thing to understand is nowhere in this does it say that this is charity. So you can charge, you will get money either from government or from the buyer, accepting that it is affordable. So what does it do to you to raise money via social bond? You will be able to raise funding at a slightly lower cost, anywhere between 0.75% to 2% if you look into the global market, for which I am referring you to the Climate Bond Initiative, which is CBI, the website. You can go there and see huge amounts of information. And if you tap into the international investor market, there are many investors who want to give money for such causes. And if you are a good implementer of such projects, they are giving it at a lower rate. So your clients can benefit from the advice that you as a chartered accountant give to them. Observe the processes, whatever I'm going to mention, and via SRSB, I'll be more than happy to give you the package of the mother documents from ICMA. Work along those lines, help your client raise funds for it. Could be something they're already doing. He's already a builder. He's already providing certain kind of services. He's already in some infrastructure work. Tap a market, funding is easier. There are lots of people queued up to invest from overseas and their representatives in India. And because there are many people who are wanting to give money for this, the interest rates are likely to be somewhat lower. If you put together a good, credible plan, you can raise the money. And this is kind of thing that we do all the time for our clients. The sustainability bond is something which, this is the reason for me to cover green also, though the SEBI circulars, green regulations are in a different circular, because the term sustainability bond combines green and social, right? So if you look into the SEBI circular, it says certain social projects also have green benefits, environment benefits. Certain environment benefits also have social benefits. Like for example, what? Like for example, water management. If you do tree plantation and conservation of water in a particular locality, automatically you can create a basic infrastructure of water security for that area. So it is a greening, it brings down the carbon footprint, it creates positive environmental impacts, but it also creates positive social impact. That is a sustainability bond. Let's take a project which is, I gave an example of a project which is green, which has social benefits. Let's take a project which is social and it has green benefits. So an area might not have proper sanitation and a sanitation project is undertaken to be done. Please don't mistake this for charity. I am a civil contractor. I got the project to do a sanitation workout for a particular living space from some government agency. Now I have to fund my project. I can go and raise the money under a social bond. Now, when we do proper sanitation in an area, the groundwater seepage, the groundwater does not get contaminated. And due to the proper sewage and sanitation, the environment is protected, the groundwater is protected, the trees in that area are protected, and the green aspects of the social project are enjoyed. So when this blend is there, that's a sustainability bond. And then a sustainability linked bond. So this sustainability linked bond is more similar to what we can call the general purpose. In typical corporate borrowing, we have fundraising for general corporate purposes. This is similar to general corporate purposes in that you don't have to say this green, that social, the other sustainability, but you have to give a measurable KPI, key performance indicator, or sustainability performance target that you are going to impact in a positive way. So, very simply put, Madam Chairperson spoke about carbon emissions. So, if carbon emissions are going to come down, that's a KPI, that's a SPT. And so on, we can say, and I'm going to give you hard examples from people who have raised social and green bonds, sustainability bonds, what kind of articulation they make regarding their targets. And regarding these KPIs, these targets, and these projects, a profession like chartered accountant, uniquely positioned and gifted, has got a key role to play, as we shall see. If there are any questions, you can please drop them into chat and the coordinators will keep sending it my way. My preference is to address questions when they occur, if I can catch them, or at least at the minimum at the end, maybe 15-20 minutes at least we should have in our hands for any interaction. Okay. So now I am going to go into ICMA. Why? Because in SEBI circular beyond this point, there are 4 annexures. The annexures either make reference to the international standards or reproduce the international standards in the SEBI's language, in a SEBI framework. Okay. But outcome is the same. We have done some neat work to make it more easy to understand and follow. So otherwise, reading circular, it's only a 12-page circular. If you take preamble and all the other courtesies out of it, it may be maybe less than 10 pages. That's not the challenge for any chartered accountant. And if you attend a webinar, that too particularly by me, if I may be permitted to say so, you should walk away with clear value. So let me just go into it once again. Green bonds have environmental benefits, and ICMA has articulated the green bond principles. Okay. So green bond principles we'll talk about. I'll share with you what broadly they talk about. Similarly, social bonds, positive social outcomes, core components of social bond principles. What does this mean? Go to ICMA website or via SRSB through me, get the green bond principles, social bond principles, make sure that what the client is planning follows these. I'm going to talk about client in so many different avatar. In the current avatar, the client is using the services of his chartered accountant to raise money via these instruments. In the later step, the chartered accountant is going to use these green bond principles to make sure that some particular party's issuance is complying with the green bond principles. The guidance document is the same. In one case, you have helped the client to raise the money. In other case, you are auditing the client's implementation of the project using that money. The sustainability bond is, as I have already mentioned, combination of green and social. So it should be combined, it should be aligned to the combination of green bond principles and social bond principles as articulated by the company which is raising the money, that the project which they are undertaking under sustainability, third category, has got some social factors, some green factors, and they should be able to link it to the social bond principle and the green bond. And lastly, the sustainability. So each has their core principles. Each of these bonds has their own core principles. And the SEBI circular says, you take money for green and do social. You take money for social and you do sustainability. You take money on sustainability name and do something else. All of these are violations. So alignment to core principle is a underlying requirement. Okay. Now there are 4 principles. Okay, I'm going to cover the principles, but use of proceeds is the single most important one. There are 3 more principles in the basic architecture. The same architecture you can see in SEBI circular also. Let us start at the beginning. There is a project. That project should, how should it use the money? Only for the project. The second one, which is grayed out over here, but I'll be sharing the particular infographic again in a later screen. What is the process for project evaluation and selection? How did the borrower arrive at this particular project and not any other project? Why sanitation? Why not drinking water? Why drinking water? Why not affordable housing? Why affordable housing? Why not economic empowerment? What is the process by which you chose this project? Then comes the reporting. The reporting is not just end of life reporting, but throughout the life reporting. Okay. So here I have to make the distinction between general borrowing. See, when a company issues a bond, general bond, corporate bond, it issues it in the market, raises the money. Then what does it do with the money? In good faith, investors subscribe to that bond based on the offer document, based on their understanding of the corporate, based on their own assessment, and they trust and believe the corporate to execute the project as indicated. As per market practice and general market practice, investors in the first instance focus on receipt of the interest in bond market known as coupon on due date properly. Secondarily, they will look at the quarterly annual report to see whether that capital work in progress is seen in the schedules, whether the capital asset is created, and whether that capital asset started to generate cash flows. But do they see it with a magnifying glass? Not really. Take Reliance, N number of corporate bond issues. So long as the investor is getting its money, they are not actually saying, oh, you said 1,000 crores or 10,000 crores being laid for pipeline. Please show me pictures of the pipeline. And the corporate is going to say that's a 6-year project. And it's a whole thing, and I can't be telling you all this. So, in a matter of practicality, money is fungible. The money goes into the corporate executes the project to the plan. In the middle, they may have used something for a small working capital need or parked it somewhere and brought it back into the project. All these things, in practical terms, it may be occurring. The project should get done, but assume that the project is done only 3 quarters. The bond is issued for 6 years. The project is completed only 3 quarters. The bond investors will be looking at their periodic interest payment, and when the bond matures, did they get back their principal? the impact of not having implemented the project casts a shadow over a period of time, eventually reflects in underperformance of the corporate, which catches up with the company maybe 1, 2, 3, 6 quarters, 12 quarters, or whenever. So that is very different when it comes to these bonds. With these bonds, between this reporting and management of proceeds, every year the corporate has to report what is the progress regarding this particular project. And under management of proceeds, cost of project, how much has been utilized, what is the percentage completion, where is the unutilized balance lying, and this has to be certified. Now, so many companies have issued so many similar bonds in international markets, and hopefully we are going to do in Indian markets also. Who do you think is the most qualified person to certify regarding use till date, utilization of funds, and management of proceeds as on reporting date? None other than chartered accountant. I want chartered accountants to have 6 knives. One for the BRSR reporting, one for assurance, one for these kind of things. And there are minimum 6. And keep the knife sharp and take your cut of the market, take it away, take it back, prevent pretenders to be entering into our area. So, since a sustainable bond combines both types of bonds, it's a combination of what are all the rules for green bonds, what are all the rules for social bonds. Okay. And in green, if I will quickly read from the circle on the left, I have somewhere else a larger one, you can see more clearly. Green buildings, energy efficiency, transportation, renewable energy, circular economy, biodiversity, sustainable water and wastewater management, climate change adaptation, waste management and resource efficiency, natural resources and land use. These are all the things. And in social bonds, as SEBI has reproduced, affordable infrastructure, essentials, affordable housing, food security, economic empowerment. Why is it important to link to these principles? The beauty of many of these frameworks, they give you end-to-end solution. So clients will come and say, Sushil, can you tell us how to do this? And the chartered accountant will say, I will tell you. And very simple for the chartered accountant. If you go through this entire stack, I'm going to share with you. If somebody is putting up a project on transportation, what are the measurable key performance indicators for a transportation sector person? So if your client is a transportation sector person and planning to raise money from these kind of bonds for those kind of projects, you can sit with them, show them, don't show them the original standard or the principle, develop it into your own with your letter, with your logo, whatever it is. Say, these are the ones, select from this. Then he will ask, what will happen if you select from this? That is coming later. But just understand for now, my project setup, how did I select my project? My use of proceeds, how did I implement the project? My reporting periodically, my management of proceeds in the meantime aligns to the kind of project that I take up. And so, one of the things that Indian businesses should strictly avoid doing is just randomly picking a project because funding is available. Because with periodic reporting, what happens is that you go to Climate Bond Initiative website and see. They report on who picked up money for what and did they do or didn't they do. So you want to maintain the clean track record. We as chartered accountants, by our code of conduct, are obligated to make sure that we don't allow our clients to do things which will result in trouble for them. yeah, and will result in us withholding ourselves from certifying anything. So we have to do that. So we should watch these social bond principles, green bond principles, study them, and look at the alignment to KPIs, okay, which I'll show you. And the beauty of this is they are all fully mappable to UN Sustainable Development Goals. Now, UN Sustainable Development Goals are 17 in number. The important thing for us to know, this market of investors who like to invest in social, green, sustainable, etc., they want to see that the money drives towards these UN SDGs. So, again, in the framework, from the project through the KPI to which one of these? That means when I prepare my offer document or when I write a note to an investor or a pitch to an investor, I should link it to SDG, and this linkage is available within ICMA documentation. They have themselves put these kind of projects, those kind of UN SDGs. So even we don't have to tax our intellectual capacity too much in, not that we lack intellectual capacity, but if something is available as in a checklist format, there's no need. You can just take it from there and then reference it and say, refer such and such document. This is what I have done. So I already covered the sustainability linked bond. It is a general purpose bond. It is possible to combine a use of proceeds approach with a sustainability linked bond approach. What is the distinction? The sustainability linked bond approach has more focus on KPI, which you have to indicate upfront. Okay. So you can say these two projects, little bit of green, little bit of social, that KPI. Just while we are covering all these variety of bonds, there is also something called a blue bond. The blue bond focus is preservation of the maritime environment. Why am I saying this? Firstly, because this is an academic environment. You have dedicated some time to learning something, in enhancing your awareness. I might as well throw it in. It's just one sentence. In some places, it's called blue bond. For ICMA, if it is about maritime environment, it's a green bond. Okay. And there is also the brown bond or the transition bond. Please understand SEBI circular is substantially open-ended. So that if some company is doing anything which moves it from what is called brown, gray or dirty to clean or green, it will fit within the ESG bond or under the green bond. So possible eligible use of proceeds. So 4 categories: use of proceeds, project evaluation, management of proceeds, reporting. We are now on use of proceeds. It could involve carbon capture and storage, switching coal plants to natural gas, waste to energy, switching diesel powered ships to natural gas, use of recycled raw material or higher levels of recycling. And to all chartered accountants, if you have not heard about it, make it your business to know about National Green Hydrogen Mission. The government of India is literally giving grants to industries that can participate in that. It involves manufacture of green hydrogen from solar energy, whereby a power plant, ammonia plant or a refinery or a steel plant or a cement plant require high intensity energy, which you cannot directly supply from solar. But if you take solar and make hydrogen, hydrogen is high intensity energy. Government of India has a $100 billion greenfield whiteboard. When I say greenfield, I mean it's not like Gadkari building 1,000 kilometers more of roads. There are already roads and I am building more roads. Here, nothing exists. The technology itself is new. The pipeline, the storage vessels, the steel vessels, the tanks, the vehicles, the everything is being made from scratch. It will cost $100 billion over the next 10 years, which is a staggering sum of 8 lakh crores, of which in phase one, Government of India is giving grants to entrepreneurs willing to set up projects in the space, 20,000 crores in grant. You can see Tata has launched a green hydrogen truck. 18 months they are going to run experiment on how trucks use green hydrogen. Obvious to me, they are tapping into the government national green hydrogen mission funding. It will also qualify under this, meaning what? Promoter has his own equity. Government is going to give a grant. You can also raise a sustainability bond and become big player in an industry which is going to be 8 lakh crore of investment over the next 10 years. Let those industry people who are your clients raise the money through you. You advise them on that also. You advise them on today's topic also. And say a small prayer for all chartered accountants. Why? Why should we do these kind of bonds? Because huge amounts, this is, I took the data this morning, huge amounts of money are still flowing in. Currently, I saw last 12 months, close to 800 billion. Every year, about $1 trillion of new issuances are happening in this space. I'm just quickly showing you over here. Yellow is energy, orange is building, green is transport, blue is water, green is waste, deep green is land, gray is industry, pink is information and communication technology, and the other gray, deeper gray is the adaptation from gray to transition from gray to green or blue or whatever it is. Okay, plenty of money going there. And here in the December column, you can see little bit of green. Why am I interested in green? Green color is allocated to India. But you can see over here, dark brown US dollar. So Trump is saying whatever he is saying. I don't believe in climate change. I am not interested in Paris Accord. The money is quietly working in the background. 20 billion, somewhere between 10 to 20 billion Americans are raising every month. After telling Trump will talk big, but the money is moving. Look at Europe, the largest chunk here in that month, September, Europe. What is this? This must be approximately $40 billion. So don't look at those headlines from America and think sustainability and all after Trump 4 years later. The money in America speaks louder than the president of America speaks. And war is happening, so sustainability, environment, climate, everything is gone to the dogs. Today I read the climate scientist's statement that the numbers are looking horrible for saving the planet. That does not mean the money is not moving. That does not mean work is not being done. That does not mean we should, by mistake, stay uninvolved. Because politicians come and go, the major trends, they just continue. Sometimes they are little lower, below the surface. At other times, they become very obvious and in the front headlines. So, and Government of India, we are an energy deficient country. We are 140-50 crores in population. We need to get everything under control. We need all our human development factors, all our social factors, all our environment factors, and our own energy self-sufficiency. National Green Hydrogen Mission says by 2035, India will export green hydrogen. You see the audacity to dream that an importing country from 1947, only importing, now in the next 10, from 2035 to 2050, will become an exporter of energy. And it is a clean energy. Green hydrogen gives you full energy and pure water as a byproduct. Okay. So, answer for all CFOs that are almost always chartered accountants. Do you want to bring down your cost of capital or not? So I'm just sharing a MSCI research. See, if you have a better ESG score, your cost of equity, this is the data. MSCI is a ESG rating company. It is a rating company, but it is also a very big data aggregator. In fact, the ratings that it does are a byproduct of the data that it aggregates. From the aggregated data of more than 20,000 companies worldwide, which is doing on a daily, weekly, monthly basis. And much of this work is now done here in India. How do I know? Because they are a client. But the document I'm sharing with you is in public domain. They are a client, so I have ringside view of kind of data aggregation and ESG rating work that they are doing. See what he has shared here. He has shared that in total world, that 0.45% is the savings in the cost of equity and 0.75% lower cost of debt. If you are a high ESG scoring company, you are able to save that much on your. If you come to emerging markets like country like India, there is not that much difference yet in cost of debt, but you can use these same instruments to raise money in international market. You will get a better differential. Okay, I have a case study for you. Right after the June circular came, L&T raised 500 crores. And when I was doing my updation for today's presentation, I came across another interesting data regarding L&T. So here's the L&T ESG bond. Don't ask me technical details how. SEBI circular came on 5th. L&T's bond issuance was announced on 7th under this SEBI's ESG rule book. Okay, so it must have been in parallel processing. So it is a issuer is L&T, bond type is ESG bond, compliant with the latest SEBI circular of June. It's a 3-year bond, 500 crore, coupon rate 6.35%, lead arranger HSBC, credit rating AAA. That's a credit rating. There is not an ESG rating. SBI mutual fund put the largest amount, at least 75 crore. Now the last one, use of proceeds. Aligned with L&T's environmental targets, specifically reducing greenhouse gas emissions and intensity of freshwater withdrawal. This word intensity of any resource, water intensity, energy intensity, waste intensity, whether in BRSR report or in ESG bonds or in KPIs or in metrics, intensity means per unit of production or per rupee of turnover. Now, please understand, it is not that after this L&T is going to start doing infra work. They are India's biggest, oldest infrastructure execution projects company. They have just tapped into an available market, raised 500 crores and dedicating it to something which they were already probably doing. They were already probably, as Madam Chairperson said, India has a 2070 target, 2050 target. Many of these companies, apart from the governmental national targets, are under investor pressure to do better sooner. So he's talking about carbon neutrality, 30 years ahead of nation's carbon neutrality. Of course, unless L&T does by 2040, India can't achieve by 2070. And water neutrality by 2035. All this for what? To get a good name from investors. Therefore, what? Therefore, lower cost of equity, lower cost of debt. Okay, those are always the reasons we pitch for doing BRSR properly. You can become attractive to ESG sensitive investors. This is what they have given as use of proceeds. Now it is issued only earlier this month. I am going to share with you What companies that have done issuances in 16, 17, 18, 19, 20, what kind of annual reporting they do later on, not Indian example. Okay. It's fully compliant. It has disclosed sustainability objectives, which I have summarized in the previous screen. Kindly see this third item, mandatory second party opinion. What is a second party opinion? You remember there are four components to the process over here: project evaluation, use of proceeds, reporting, management of proceeds. This one is the project evaluation. So, company writes a project report, some independent third party looks at that project report and says, yes, this is validly drafted, and makes that opinion available to the potential investor. Okay. Now, this space is quite heavily occupied by another one of my clients, which is the Sustain Analytics, owned by Morningstar, which is another one ESG rating company, and S&P Global, which is not a client, unfortunately. So, yeah, there are some large industry players who have taken that slot number 3. It doesn't mean that a good CA firm cannot put up a firm that does the same processes thoroughly and authenticates. Because after all, ICMA documentation shows you how to do a second party opinion. I will show you just now, right now, how to go and download, I don't know, 100 second party opinions, develop your own best practice. And those guys are international practitioners, and we are made in India practitioners, and the costing will definitely be more favorable towards us, though I don't advocate going cheap. All I advocate is homegrown second party opinion providers. And then clearly, I already talked about KPI. I have more to share with you on that. This post issuance impact reporting is the monitoring of the KPI. You said you will improve nutrition. Have you? You said you will improve groundwater levels. Have you? And scientifically, have you measured? And are you reporting back to the investor? That is the point. That is so. All this is mentioned in SEBI circular, and L&T is saying we are fully compliant. Okay. Now today's headline. I don't know whether you can see this. It is June 19th, 7:55 a.m. What is this saying? This is saying L&T is thinking about one more ESG bond issue. Why? Because the earlier one on June 7th got them cheap got the premium. Premium means in bonds, it means lower cost of funds, cheaper, at a cheaper rate of interest. They got a 500 crores in one day. What does it do for L&T? You take all the net zero, all the social stuff that you're doing, and L&T compulsorily has to do social stuff. If you're building a highway or any other infra project in an area where there is a local community, you have to immediately do something for the government, will require the contractor to do something for the displaced people, some alternate housing, some social outreach. So money is going to be spent on all these things. Instead of using your general corporate funds for all these things, instead of using your working capital for all these things, and where government is your customer, which for L&T, government is a very large customer. Government is the worst paymaster. It is the best paymaster, there won't be default. But it is the worst paymaster, your working capital will get stretched. Put some ESG bonds, enhance your funding, and dedicate it to those specific projects which are part of your infrastructure. Bring down your cost of funds. So look, mulling one more. Okay. So proof is in the numbers. So me telling you, or that MSCI researcher telling you that ESG bonds will cost lower rate of interest, here is the evidence. I'm now jumping back into the SEBI circular to show you how it matches to ICMA. Initial disclosure requirements, continuous post-listing obligations, appointment of an independent third-party reviewer certifier. Who? Chartered accountant, chartered accountant, chartered accountant for social bonds. And now I'm taking diversion from SEBI circular. So if you go through all these, it will be independent third-party reviewer certifier for social bonds, then somewhere else it will be written sustainability bonds, then somewhere else it will be written sustainability linked bonds, then somewhere else it will be written there green bonds. In all cases, the process is the same. Use of proceeds, project evaluation, management of proceeds, periodic reporting. And we can get into this independent third-party reviewer, use of proceeds, management of proceeds, and annual reporting. Okay. So this is from SEBI circular. It is the responsibility of the issuer that all projects funded by the proceeds meet the documented objectives as disclosed in the offer document, utilized only for stated purpose, which is very different from other corporate bonds, as I have already explained. Lots of words. I'm going to reduce it to a single word. Greenwashing is a terminology which ESG introduced to English language. It means to be gray or red or dirty or brown, but wear the green clothes. So what does SEBI say? SEBI say purpose washing. You are using not for green, not for social, not for sustainable, not for sustainability linked. So is your bond true to label? Okay. So it says you should not say green or social and do other things. You should not divert the funds. You should not use misleading label. You should not selectively share data, cherry pick the data. All these finer points, whatever it is making, are all about very tightly aligned source of money, use of money, measuring it, reporting it. One of the interesting things to note is it is standard for social bonds, sustainability linked bonds, and green bonds. If you are found to violate the terms of issue, the lender can apply the default rate of interest, which may be a good 2%, 3% higher than the agreed rate. They also retain the right to call back the money because they didn't give you the money because they couldn't invest anywhere else. They are not interested in leaving the money with you just for the purpose of earning interest. They are willing to earn it somewhere else. They gave you the money for a particular social or a sustainable purpose. If these violations are there, they have the right to ask you for return of money. While talking about that, I am obligated to tell you about covenants in a standard corporate bond. The covenant in a bond agreement will say, if you fail to pay interest, if you miss any principal repayment installment, if your financial condition deteriorates to the extent that the debt equity ratio goes from 1.5:1 to 3.5:1, or if you lose your rating with a rating agency or any other corporate misgovernance and so on and so forth, the lender has the option to call your money back. Nowhere does it go so far as to say if you explicitly miss your project deadline, if you explicitly fail to implement the project, you may fail all those things. If you pay interest and repay principal, none of these covenants get triggered. They may get triggered from a ratings downgrade. Good businessmen, good entrepreneurs, good corporates, they know how to manage their overall story reasonably well. Okay. So that is the operational distinction between general corporate bonds and these. Here, the covenants are stricter and very tightly linked to use of proceeds. So I go back to the four components: use of proceeds, process for project evaluation and selection, management of proceeds, and reporting. The use of proceeds each have different goals, and the process of project evaluation and selection, the expectation is similar in principle in all the fundraising cases. You are expected to follow. I'll share with you also high level view of what is that process. And management of proceeds, total fundraised minus utilized. The utilized should be supported by a technical completion report in that reporting, and the balance amount should be visible in a secure bank account. It should not be mixed up with funding for general corporate purposes. Okay. And then comes the harmonized impact framework. This harmonized impact framework is a very technical, beautiful document. I say beautiful, why? Because practitioners like you and I, we just need to take this harmonized impact framework document and we can do the complete use of proceeds audit, project audit, report development for our clients or for anybody whom we are contracted to review. We can, or sorry, no, word is not contracted. Anyone that we are retained to review. We can use this framework. It serves as a checklist. Our job is to methodically make sure everything over there has been properly done. I mentioned regarding the complex nature of ESG as a domain. If the project which you are involved with is highly technical, you can hire a associate who is you can retain an external professional who may be an engineer from that particular domain or a specialist from that particular domain to work on your instruction and give you inputs regarding various technical factors. So now with this, I can articulate a checklist. So my checklist has three parts. The first is strategy and rationale. Okay. Now it is articulated like this for a particular purpose. Okay. And I will cover that in these set of slides. First thing, the very, very first thing, you can't say, there is a guy who is willing to give for a social project. Come on, Mr. New intern, please write a project report for it. I mean, you can, that's not the way to do it. And there is a reason why you will have difficulties if you do it that way in this product. Okay. You should have an overall strategy. In that overall strategy, there should be sustainability or social and social strategy like L&T. I'm going to make, fresh water, I will stop utilizing. I will bring my fresh water down to zero and recycle all water. I will bring my carbon to. I will improve the community wherever I cause disruption. You should have an overall strategy. Under that, you should have the social and or sustainable strategy, which you can align to SDG for a target population, etc. What that does is it becomes easy for you to articulate the project. So when they come and ask, why did you pick this project? You can very clearly say, this is my overall strategy. Under that, these are all the problems we currently face. Then this is what we are planning to do to bring down those problems. That is aligned to UN SDG, for example, for social. Similarly for sustainable. Okay. Sustainability is the circle and social is the steps. All listed in the SEBI document anyway, and available in the ICMA documents anyway. And this PDF will also be coming to you anyway. Okay, so don't worry too much about it. Huh? So that checklist has to be there. That has to be there. The second thing is to focus on the basic architecture: use of proceeds, process for evaluation and selection, management, reporting. And the last thing is that you have to have external providers. How many of these roles can we, the chartered accountants, occupy? It's a different topic. But they have to appoint someone. ICMA's green bond principle, social bond principle, sustainability bond principle articulates what should be principles followed in appointment. And this external review is actually what now industry calls second party opinion. Somebody else who is looking at what is the project about. You can match that to serial number 2 on the left top over here, process for project evaluation and selection. Then move to the right. On the right bottom, you can see external verification or reporting. This is annual reporting. And one final reporting at the conclusion of the project. And ICMA will also say at the crucial stages of the project, you can produce intermediate reports also. Stage 1, stage 2, stage 3. Each stage can have a report. End of year 1, end of year 2, end of year 3, end of year 4. Each year end will also have a report. And overall completion, that will also have a report. Right? And in this external verification and reporting, 3, management of proceeds, 4, reporting. This management of proceeds, 100% it's a CA certification job. Whatever else job over here you want or you can place or not, serial number 3 from the left top, you can place. And the last one, public disclosure reports. And the templates are all made available by ICMA. How you are going to report regarding your project, I will show you. We already know from our study of BRSR that SEBI has a template. People put lot of English and chairman speech and big words and beautiful infographics and all. So there is a core technical report and there is all the flowery stuff around it. Okay. So those public disclosures I am going to share with you. As I told you in the last part of my session, some real life examples as a cross section. Okay. And these are those real life examples. So before I go there, just to repeat, we have a strategy. Under that strategy, we are going to select a project. We are committing to the proper use of proceeds. We are committing to the proper management of the balance amounts. So you can also take the structure where the bond investor commits and you can take drawdown from time to time, which is also an acceptable management of proceeds. When you go into the ICMA documentation, you will find that SEBI's articulation of the bond is at a higher level. Whereas in industry, within this, you can also do securitization, you can also do tranching, you can also allocate the project proceeds in different ways. So some 4 or 5 simple structures are available. I did not think that we may have the time for it, so I have not scheduled it in my basic run stack. Time permitting, I can share with you just 4 structures that ICMA has visualized. They are not very complex, but just from a general awareness point of view. Regardless of the motivation, and possibly certain companies will be in a hurry also to issue these green, social, sustainability linked bonds. Please make sure that the client talks about a higher level strategy and then makes it flow. And I have very strong reason for saying that. Now all theory is interspersed with examples. For example, Delta, which is a US airline, they have a carbon neutrality plan. The carbon neutrality plan, when they say carbon neutrality, it's very, very hard for an airline to become, eliminate emissions. So they will say, I will plant trees and offset my sins by whatever pollution we do, or I will buy carbon credits and things like that. Okay. Or I will plant trees elsewhere so that the carbon gets sucked into the soil. Now you could issue one of these bonds, ESG bonds, for that project where the trees are going to be planted. So if you have a higher level strategy, you can articulate a project which is mirroring the strategy and take it to investor. Okay. Never mind that. See, this here, okay, this is I really couldn't do better with this, but let me just, I'll read it out to you. This is of a Ahold Delhi's, which is a very, very big food retailer. You can compare it in India equivalent to Reliance Retail, the Smart Reliance and all those stores, where they stock different kinds of products from different kinds of FMCG companies, but also have their own products. Here you will find number of social factors. For example, increase the healthy food sales. You can find green, bringing down emissions. You can find environment, bringing down packaging. You can find UNSDG, bringing down food waste. So here is a strategy. So many of the companies have a well articulated sustainability strategy document. My finding, 1,000 companies, 2 years, now I have to commence year 3, this is BRSR reporting. Strategy says something else. The BRSR report says something else, completely different or contradicting internally. When you articulate like this, it has to flow from this. Companies do things like this, like making all these fancy infographics, because they have the chance that if they produce 400 pages in a document, they can obfuscate to the reader of the financial statement. Before Trump, under Biden, the US market regulator wrote a circular. If your statutory filing is thinner than your sustainability report, kindly explain how it is thinner or why the other is thicker. The actual SEC circular saying this. When it comes to sustainability report, because nothing is being inspected, nothing is likely to be questioned, you will write whatever you like. And when I say statutory filing, punishable for violation, you will write very crisp and it will end in 10 pages. Explain the difference. But okay, the point was not that. The point is, here is a social factor for which Ahold Delhi's. Why Ahold Delhi's? Because they raised social bond. Okay. So see what all they have put. We will improve our labeling. Our labels will be larger. It will be in the front of the bottom package rather than behind at the bottom. We will put guiding stars. Guiding stars is an agency that says that if a food is nutritious, you can use our logo on the product. That means Ahold Delhi's has to pay guiding stars for the accreditation. So Ahold Delhi's will raise a social bond, link it to a UNSDG, and manage the cost of this project of enhancing the social factor behind their foods through that funding. So they have collaborated. You can see here various logos of various people that do accreditation. And I just, the screen grabs can be very small to read, but I've just put in orange over there. These collaborations underscore, emphasize Ahold's commitments to pathways. Pathways means I am here, my sustainable performance target is there. What is the path by which I will go from here to there? Why is all this important? Before the instrument ESG bond is issued, an independent party will review your project. At that time, if your project doesn't have sustainability strategy, and based on that ESG strategy, based on that green bond, social bond, sustainability bond, and based on that a project, then the foundation is weak, your pre-issuance review will become shaky. The reviewer will take the social bond principles and compare your project, will take the annual report, sustainability report, compare your project. If he doesn't find alignment, he will say, these people are talking in the air. Then post-issuance. This is a very, very tight structure. It is not to be confused. Even bank, when they give a loan, they manage the key ratios. This level of detail, a more smart bank manager who visits his client regularly and just walks around the plant, talks to the works manager, may have. Otherwise, they all look at key numbers. Post-issuance, an issuer's management of proceeds has to be supplemented by the use of an external auditor. I am not going to read other third part. For me, there is no one other than chartered accountant to verify the internal tracking, allocation of funds to eligible projects. And if at pre-issuance, you are not aligned with the various principles, various measurements systems, various metrics, post-issuance, you will not be able to get a clean report. And please understand, the borrower will be issuing a post-issuance report, not 5 years from now, every annual year, every milestone, he has to issue a report. So you can't say it's a 6-year project. I'll tell you in year 5. For example, science-based targets initiative, you have to commit, you have to develop the target, you have to submit it to SBTi. SBTi will say yes, and then you have to disclose it to your stakeholders, right? Look here, ICMA helps the effort by suggesting KPI. So when the client says, okay, Mr. Chartered Accountant, Miss Chartered Accountant, what kind of indicator do you want me to commit? You should say, as per ICMA template, which is what SEBI has mandated. Then you know what sector your client is in. Let me read out some of the hard to read print over here. Sector like automotive, aviation, banking, brokerage, construction, consumer goods, energy, food and agri, healthcare, industrial, manufacturing, insurance, maritime, metals and mining, retail, technology, telecom, transportation, utilities like electricity, utilities like water, utilities like waste management. By each of these industries, what are the metrics on social, access and affordability, community inclusion, health and safety, improving the working conditions of employees? All these are listed. And if you further go into other standards, you can get what is the metric. Then the client has to say, today, 30% of my contract labor or the people that come to work in my factory have good standard housing. Over the next 5 years, I intend to take it to 80%, 100%. That is KPI. Then you borrow against improvement of the working conditions or the living standards of your own employees. Make that a KPI. Take the money. It will come at a lower cost. Apply it. Then report. When I took this money, it was 30%. This year it is 35%. Next year it is 45%. And so on and so forth. And become a darling of the market. Ultimate goal is to be darling of the market so that share price goes up, cost of borrowing comes down. Okay. This is for sustainability linked bonds. So many, all this is there. I've just given some, all this is put here so that I can just, when I release it via the SRSB, you will get all this. Okay. Now see how companies select their KPIs and trajectories. Okay. This is US company FedEx. Vehicle electrification. The company has set a goal, entire pickup and delivery fleet is going to be zero emission by 2040. Okay. Sustainable fuels. The company will continue to invest in alternate fuels to cut down emissions. Sustainable packaging, right? Fuel conservation and aircraft modernization. Now, for each of these, they have to give numbers. They have to give year by year numbers. What is actually a glide path? When I say glide path, currently my numbers are at this level. I am going to control them to this level. Year by year, like a plane coming in for landing, year by year, I'm going to bring it down and achieve the target. Okay. Delta commits to SBTi to align with Paris. AstraZeneca. Now I'm going to give you some more specific example. AstraZeneca is developing pressurized metered dose inhalers using a particular propellant. When you press, it does shh and releases, that chemical which causes that pressure to build has a global warming potential. They are switching to a different propellant. For this, they can raise the money. Our own Wipro has adopted green building design principles for its site and committed for bringing down scope 1 and scope 2 emissions. And here is how all of that helps. Okay. When you have to go for a second party opinion, when you need to get a rating for your ESG bond, your pre-issuance review will come handy. You will pass second party opinion with flying colors, and your rating agency will give you a very good rating. And post issuance, the verification and the certification will go smoothly because pre and post are perfectly matched. This is the operational detail, the sum and substance, the workings, the nuts and bolts of the SEBI circular. Those are all external reviews. Now, chartered accountants can't be rating agencies. Chartered accountants can potentially be the party providing the second party opinion, but chartered accountants can definitely be serial number 2 and 3, which is verification, certification. Okay. The agencies carrying out the external reviews need to see the metrics. They need to see the metrics before in the pre-issuance review. They need to see the different set of reviewing parties. They need to see the same metrics in the post-issuance review. So the post-issuance external review has access to second party opinion, external ESG rating, and see what is the movement from there to here in terms of the articulated project. ICMA provides guidance for verifiers. So when we are saying, oh, I as a chartered accountant need to go verify, here, conformance requirement, what is it that the project has to achieve? Potential agreed upon procedures. What is the readiness assessment checklist? Relevant procedural category. How am I going to judge this? So I talked about UN SDG. I talked about KPI. I talked about harmonized effects framework. Those kind of standards. And what are your potential findings? Are they in the green tick category appropriate or not? Not appropriate. Detailed process is described over there. I have just summarized it for you. Okay. Now, before just running away by saying thank you, and this is the time while I am gathering my thoughts, I request participants to kindly look at articulating some questions, doubts, and I'm just going to come back and share with you a few good examples of how some of these things look. Okay. So I'm now going to share the SPO. What does it look like? Okay. Are you able to see the screen which says, here is what a completed SPO looks like? Yes. This is the Ahol Delhi's second party opinion. He has given a green take. He has talked about use of proceeds over here. Let me read out the evaluation summary. The SPO issuance agency Sustain Analytics, which is also an ESG rating company. His competitors are S&P Global, MSCI, and Refinitiv. See his evaluation summary. Sustain Analytics of the opinion that Ahold Delhaize's sustainability bond framework is credible and impactful and aligns with Green Bond Principles 2018, Social Bond Principles 2018, Sustainability Bond Guidelines 2018. And this assessment is based on the following. I have gone through, then below he says, use of proceeds I have looked at. They are aligned to UN SDG 2, which is zero hunger, 7, affordable clean energy, 9, industry innovation infra, 12, responsible consumption and production, 14, life below water, marine life, water life. How did they do the project evaluation and selection? There is a paragraph describing. Okay. So you can see the flow. It starts from having a framework, sustainability bond framework, which is aligned to all the principles. Under that, there is a strategy. Under that, there is a project. And they have a process for the management of proceeds. The Sustainability Bond Committee tracks the allocation of proceeds to eligible projects. This is a sustainability linked bond. This particular issue is it's a bit more complex, okay, because there are multiple projects under it. And see over here, the Sustainability Bond Committee will be responsible for tracking the allocation of proceeds to eligible projects, and Ahold Delhaize will hold the balance of unallocated proceeds in its treasury, invested at its discretion. Wow, is that a typo in the SPO report? Invested at its distraction, it says. It should be invested at its discretion in money market instruments or to repay CPs. Projects will be periodically assessed for eligibility, and ineligible projects will be removed from the project portfolio. Reporting, and they will give relevant metrics on an annual basis on the company's website. So this is the more detailed document, but you can just see over here in section 2, what is the assertion made by the issuer. In the 2019, the Dow Jones Sustainability Index ranked Ahold Delhaize as amongst the industry leaders. It has a score of 72 out of 100, which is above sector average. Their sustainability bond framework is directly tied to company's sustainable strategy. So without strategy, issuance of all these things is not going to work. Okay. Now I told you, you can download SPOs and study. If you go to the website of this SPO issuer, name is on the right top, ISS. You can go and download any company's SPO to see what they promised before. Please understand, this is about market transparency. I may not have purchased the bond at primary issue, but I may purchase the bond in the secondary market. Immediately, I am entitled to access what is the pre-issuance review, which is the SPO. You can get the report, study it for yourselves. Here is what periodic reporting of the same guy looks like. Okay, this is the sustainability bond report, and lot of English and infographics. You can see some of the data mentioned over here. Procurement of sustainably sourced products is 72%. Okay, he's mentioning over here. And what are their key facts? He has listed all over here. Okay, 48% are from healthy products. 32% of CO2 reduction, 6,967 stores serving local communities, and all that in their annual report. Like, when you look at this, you should please understand. It is similar to how BRSR reports are seen today. One side there will be data, another side there are so many pictures and infographics. Okay. Healthier eating impact is recorded over here. All the things are reported and recorded. One of the things that I want to share with you, please, I request coordinators to reach out to the participants for their questions, if any, or I request participants, please jog your thinking, put on your thinking caps and see if I have been clear in my articulation. Is there anything else you should be hearing? Let me pick up. I want to show you very, very interesting case, which is Standard Chartered's social bond. Okay. It's a very interesting one which I picked up today. Here it is. Yes, please. Is there a question?
So there are a few questions, but you proceed, then I'll start asking.
Okay, cool. Okay. So I am going to, are you able to see the Standard Chartered issues first social bond?
Yes,
Yeah?
sir, we can see.
Yes.
Can
Yes.
see that? I am going to read out the date over there. It says March 11, 2025. Okay. Why am I interested in this date? This date is after Donald Trump. So I hear so much about Donald Trump. Will this really go on? Don't you think it will fall by the wayside? We are talking about what may or may not happen. There the money is moving. Why do I find this interesting? See, Standard Chartered issues first social bond. Okay. London, Standard Chartered, a leading international cross-border bank connecting the world, blah, 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 launches a social bond. This will primarily facilitate lending to SME, ensuring access to SME finance, helping create jobs, empowering and nurturing women-owned SMEs. Proceeds will also finance access to essential services, including healthcare, education, and will facilitate investment into affordable basic infrastructure and food security in line with the social activities set out in the bank's sustainable bond framework. We Indians, it is important for us to understand they in the West, in the developed world, they follow the process from A to Z quite thoroughly. That does not mean that they are holier than thou and whiter than milk. No, that's not what I'm saying. Whatever it is that they are thinking, they articulate the entire thing with a very perfect alignment, pre-thought. Let me take a very extreme position for academic purpose and say, let us assume that the intention is to, with 30%, do something which is not permitted under the principles. That will be engineered into the flow. You will not be able to say that they violated anything. Now look at this particular bond, and this is what I pointed out to you for L&T also, and I pointed out to you that your customer may already be doing something which is green. It does not mean he can issue. Do not confuse ESG bonds with charity. Your borrower has to return the money. That is not possible with charity. So what is Standard Chartered Bank doing? They may already be lending to small and medium enterprise. You see the small print, fine print that he has put below the black box. With 99% of the bank's social asset base in Asia, Africa, and Middle East, this bond will deploy capital wherever need is acute. Now, I know Standard Chartered Bank, having been 20 years a banker and 20 years a consultant for banks, totally 40 years, I can tell you this. Standard Chartered Bank is headquartered in UK, but bulk of their balance sheet is in Asia. So whom does he lend to? Emerging markets. What kind of people are there? What are the kind of SMEs that are over there? So he has made a big virtue out of his core business. Then what is he doing? Then he's borrowing, calling it a social bond. What will be the rate of interest? Lower. Is he going to give low rate of interest to the borrower? Nobody knows. Nobody knows. He's still going, okay, because he raised money through social bond, is he going to give to weak borrower whose ability to repay is doubtful? Absolutely not. He's going to lend to as best quality as he can determine. He's a bank. That's what he does for a living. So what is he going to do? Borrow cheap, lend high. Your clients should also do the same, which is borrow from wherever the cost of funds is lower. I will just go into the, let me also read this paragraph. Yeah, I read it. Here, financing critical clean water infrastructure deployment in Angola, Euro 22 million social loan in partnership with UK Export Finance. That means UK government is giving a grant, meaning what? Some UK company will be coming to Angola to implement this. That UK fellow may also be the bank's client in UK. There is a grant. He's the UK guy is the implementing agency. Therefore, UK Export Finance. It doesn't say UK Development Grant. It says UK Export Finance. Okay. In the next point, increasing access to finance for SMEs in Uzbekistan by structuring a Euro 114 million social financing package in collaboration with multilateral investment guarantee agency of World Bank. Very good. So you're going to finance some people and World Bank is giving some guarantee for that. So you're going to give well-structured, reasonably secure loan, raising money from your social. They are not doing any sin. They are not doing anything wrong. As a smart, clever, intelligent business, they're tapping into a funding source, meeting their business requirement. The only point I want to make is they will fully comply with the four steps of the ICMA. They will complete all the processes to an accuracy, and in their sustainability report of the bank's balance sheet, they will show that they have a sustainability portfolio in which water drinking project so much, women-owned SME so much, access to finance so much, and they'll show that they have a socially responsible portfolio. It is up to somebody else who's a very deep financial analyst to say this social portfolio is funded so much through general bank deposits, that much through social bonds. That is totally not the point. Understand the structure, understand the regulation, tap into the hundreds of billions of dollars in the world, and they are looking towards emerging market. You will find it very difficult to fund these kind of projects in USA. In USA, their concept of poverty is in our school building, only fan is there, AC is not working, is their concept of poverty. AC was not working. We are able to give our children who come to the school only one choice of food during lunchtime is their concept of poverty. You can compare to equivalents in India. Yes to questions.
Yes, sir. It was a very excellent sessions. A few questions. So, how the norms for reasonable assurance providers will be fixed? Will it be only CA firms? And how the complexity in quantifying metrics for social and governance will be handled by the framework? Will the weightage for ESG factors will be standardized or flexibility will be given based on funds security objectives?
It is already standardized.
Okay.
It is already available to you. If you go into the ICMA documentation, it is listed. In harmonized framework, it is listed. Everything, the level of detail is stunning. It's quite detailed. Okay. So
Correct.
all is available. As far as reviewers is concerned, all it says is third-party reviewers. So when I talk about Sustain Analytics or ISS, this is not a CA firm. They are just a third party. They have a certain credibility. Do chartered accountants have credibility? 100% yes.
Yes.
Can you be the third party reviewer? 110% yes.
Yes.
But you have to step forward into the gap. Either you, your firm, build the capacity inside your firm, create the branding, position yourself, and go talk. See, 90% of Indian industry has chartered accountant firm as either as an auditor or a professional advisory.
Correct.
Open one more window for BRSR, that is different topic. Open another window for this and start talking the same. The CFO whom you meet 4 times in a month, add one line item to the conversation, it will come to you.
Perfect, sir. So next question: how long the companies can continue to issue brown bonds if ultimate goal is to have projects that are green?
Okay, so if you look at how many things are dirty in a company, there could be quite a few, right? So simple one is emissions. Then you can say, I will make my electricity all green. Then you can say, I will make my water to be fully recycled. Then you can say, I will bring down my plastics. Waste recycling, I will do 100%. Then you can say, it will take 5, 7, 10 years. You can go on finding.
Correct.
And
Correct.
if you think you've finished all the opportunity, just send me your annual report. I'll tell you 10 and free.
Correct. Great. Great. Sir. So how does SEBI plan to monitor or enforce compliance with post-issuance obligations and impact reporting?
SEBI does not.
Oh,
Neither does anywhere in the world. I have done some deep research on this. I'll give you one interesting data point. There is one company, I have that one of the slide here. He missed all his KPIs. All targets he missed. His borrower got upset and jacked up the interest rate by 0.5%. Subsequently, this company made one more issuance. So if your first issuance missed the target, should the second issue succeed or fail?
fail.
Fail. It succeeded. It should fail. It succeeded. So let me draw some parallels. This is a theme that I repeat. In BRSR, if you make a misstatement, what is the punishment? Till SEBI starts taking cognizance, till SEBI says fine of this much, penalty of this much, jail of this much, then after it says that, till it names and shames, then finally till it passes a punitive order. So compliance happens over a period of time. Regulator puts down the rules, waits for time for people to align, and then after he has given 3-5 years, he tightens the screws. Same way with markets. These are all the things where market is supposed to punish. If you misuse the funds, market will not subscribe to your next.
Right.
But today market is hungry. They can't find enough green projects. So anybody comes issuing, they put the money.
Correct.
So the day the market tightens, what is the advantage for us as finance practitioners? 3 to 5 years, you have margin of error in BRSR reporting. 3 to 5 years, you have margin to learn regarding green bonds before the screws tighten.
Correct. So the next question: are there any specific incentives or protections provided to investors under the new framework?
No, there is huge amount of money. There is no need to provide them incentive. See what happens. I am Bill Gates. I do whatever, I become rich. After I become rich, I want to become charitable. Then I say, I will provide funding to projects that will improve health in India. I'm willing to give one, for Bill Gates, 10 billion is nothing, small change.
Peanuts.
So for 10 billion, what has happened in the world? No, before they used to give grant. Then when you give grant, there is no measurement of the impact assessment. So now what Bill Gates does, or these kind of people do, they say, I'll give you 10 billion in social bond.
Bonds.
By that, some 4 external parties will be involved in tracking you. In the process, I will get back the 10 billion, but I am not going to take it to my grave. I have other projects. Like the previous question just asked, how many years will we have to do green projects? Bill Gates says, my friend, 60% of the world population is living in poverty. You keep giving me back 10 billion, I'll go on giving. That is why this structure is attractive to those investors. They have the money. You just need to attach a tap, convince them that you are a good party, you are a good financial advisor who brings only good projects. Once he got the trust in you, that tap will keep flowing.
Correct.
So you can build a business around just tapping social funds for social bonds. You can build a business.
Right. So last question. For Indian issuers, what practical challenges are expected while issuing transition bonds?
Transition bonds is in some ways easy, in some ways very complex topic. If you are moving from something which is gray to green and the technology is available and proven, you have fewer challenges because you will say, I will purchase this equipment, I will junk my legacy equipment, old equipment, cost of project so much, means of finance this, payback period so much, IRR this much, done. If the technology is unproven and you want to put money into that, then the funding agency will be little more tense. A technology, if it fails, then the transition may fail. And lastly, there is a deadline for all the transition sectors. Example, currently in Europe, I don't know whether it will remain like this, but currently in Europe, by 2035, diesel car cannot be sold in Europe.
Oh.
Now, you want a transition funding. After taking $100 billion to re-engineer your car manufacturing plant, if you don't finish it by 2035, that risk is very high in transition finance. If you miss the deadline in those industries where there is such a deadline, on the deadline date is like this company will die on 31st of March 2034 if it does not complete its transition. And so the risk for the fund, this is the challenge. If you don't meet the transition by the deadline, by the due by date, by the death date, then the funding agency is in trouble. So there are 3 challenges. One, there are 3 scenarios. One, whether technology is available, only funding was required. The second is where the technology is unproven. The third is where there is a very hard deadline.
Correct.
That's a big challenge.
Excellent, sir. Thank you for taking all the questions. I would now request CA Neha Shah to give a very hearty and very well-deserved vote of thanks to our today's speaker, Sushil Ji. Yes, Neha. Neha. You are on mute.
Oh, I'm so sorry. Yeah. Thank you, Priten. Thank you, sir, for such an insightful session for today's topic. Uh, on behalf of our team, I extend heartfelt thanks to each of you for joining us today for the webinar on SEBI's framework for ESG securities. Your enthusiastic participation and insightful questions have truly enriched today's session. A special note of gratitude goes to our esteemed speaker, CA Sushil Sharma, for sharing profound insights into SEBI's framework and its implication for ESG securities. Your expertise has illuminated critical concepts, providing a solid foundation for integrating environmental, social, and governance considerations into our strategic practices. In today's evolving regulatory landscape, understanding SEBI's framework for ESG securities is crucial for our organizations aiming to align with sustainable finance practices. By comprehending these guidelines, we pave the way for informed decision making and proactive sustainable investments. We trust that today's webinar has equipped all the participants with valuable knowledge to navigate these complexities and integrate sustainable finance solutions effectively into your business strategies. We encourage you all to stay connected with us for our upcoming webinars scheduled every Thursday from 4 p.m. to 6 p.m., where we will continue exploring emerging themes in sustainable finance. These sessions aim to foster ongoing dialogues and collaborations towards achieving collective environmental and social goals. Once again, thank you all for your active participation and insightful contributions. We look forward to your continued engagement in our future endeavors as we work together to create a more sustainable financial landscape. Best regards. Thank you.
My thanks to the Institute, the committee, and each one of you. Thank you so much.
Thank you, sir.
Tech support. Please finish the webinar.